Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. When you trade and get paid, trade and get paid, trade and get paid, trade and get paid, trade and get paid.
All right, guys, so listen, if you're gonna be a Forex trader, you need to know one thing. What is Forex, right? Because when somebody told me about Forex for the first time, I kind of thought like a big shirt, 4X, like I didn't know what we were even talking about. So Forex is just short for foreign exchange. And so what it is when you go and you travel and you're going, let's say from here to Europe or something, and you are going to, let's just say Germany, you go and you have to stop, take your US dollars, and you have to stop at the exchange. You have to stop at the foreign exchange and you have to exchange your dollars for whatever the local currency is and wherever you're going, right? And the rate of exchange fluctuates based on the foreign exchange. And so you say, well, how does that make me money? So think about it this way. When a company is doing business, and we know that, big corporations, small companies, whatever, people do business all over the world every day. In fact, the Forex market is the largest financial market in the world. On average, we're over $5 trillion a day. That's right, 5 trillion, not million or billion. We're over $5 trillion a day that the market is moving in total. And that's on an average. Sometimes it's more, sometimes it's a little bit less, but the average is over $5 trillion a day. So how does that happen? Because it's not just in people going and exchanging their currency at the foreign exchange when they travel. See, when let's just say GM, Ford, Chrysler, one of these companies, let's say that they're buying parts or let's say that they're doing business with somebody overseas, right? And let's say that they're buying their parts from Japan, let's say. Well, they don't just write a check and send it in the mail and then the Japanese company deposits it. That's not how it works. What happens is, especially with these multi-million-dollar deals, what's really happening is that we're seeing the companies will put in orders and then their banks do electronic transfer of funds. And because that there's an exchange that is due, that money goes from there through the foreign exchange and is traded for the local currency of the selling company. Now, that's one transaction of millions of transactions that happen every single day. And so every time that happens, the bank has to fill an order. So imagine if, 1,000 companies do the same thing and we have all these millions of dollars moving through from one currency to another. What happens is the banks have to gather up those funds because you can't just say, through mind control or through some telepathic, right? You have to actually transfer funds. And so what the banks do is they start having to gather, the central banks have to start gathering these funds. So let's say there's a need for $1 trillion of US currency. What happens is they start going to the smaller banks and they start gathering these funds. And the smaller banks, they give these funds into these exchanges for an interest rate percentage. And the more there is a need to gather funds, that's called demand. The more that we need funds, the demand goes up, and so therefore the price goes up. Because when demand is high and supply is low, the price is high. But what happens is at the end of all that, maybe the banks are gathering at a certain interest rate, and then maybe there's too much currency that they gathered at the end. So what happens is a correction. If they needed $1 trillion, but they gathered 1.2 trillion, at the end, we see a rise in price because of the trillion, and then a decrease in price because the extra supply that was gathered that wasn't needed, so they start selling that currency off at a lower rate. And so that price drops because supply is high and demand is low. This is how price fluctuates in the foreign exchange. This happens on a daily basis. Banks do business the same way every day. The foreign exchange market is open from Sunday at 5 p.m. Eastern to Friday at 5 p.m. Eastern. And so it's 5 days, 24 hours, 24 and 5. So it's not like the stock market where it has an opening bell and a closing bell where you're only trading certain hours. You can trade Forex morning, noon, or night. You can trade midnight hours. There are different sessions, which I'll talk about in another video. But you can trade American bank hours, London bank hours, Australian bank hours, Asian bank hours. You know, there's different ways we can do this. And there's different amounts of liquidity and movement and volatility in each one of those sessions. The biggest one is the London session where the most money is moved on a daily basis. So when price fluctuates in these markets, that's how Forex traders make money. So essentially, watch this. Let's say we're looking at the euro dollar versus the USD, right? So we have euro dollar, USD. And so essentially we see a price. And let's say that price currently right now is 1.0123. Now we'll talk about more about these numbers later, but that is what would be traded. So what that means is this currency is trading for this number of this currency. So in other words, one of these is worth 1.0123 of these. And so when we exchange that, that price may fluctuate. And later, that price might be 104. And again, we'll talk about those numbers later. When that happens, there's a fluctuation that takes place and a difference in price. So what we're doing as Forex traders is we're taking a euro, trading it for USD, and as price fluctuates, we trade it back. Therefore, our euros are worth more than they were before. And we get to keep the difference. So that's how we make money in Forex. That's what we do. That's a basic synopsis of what Forex is, just how the foreign exchange works. And as we continue, I'm going to show you deeper on how we can make money as Forex traders.